A trade war escalates as US tariffs shake North America's economy, triggering market uncertainty and retaliatory measures from Canada and Mexico. Asia markets slump as US tariffs rattle investor confidence, leading to sharp declines in major stock indices right across the region. And we will be exploring how Skype sank from its rise as a pioneering communication platform to its decline in the face of fierce competition. Hello, I'm Neil Harvey here with the latest business and finance news for you on TRT World. Stocks in the United States fell after President Trump confirmed 25% tariffs on Canada and Mexico. Canada says that it will retaliate, while Mexico, the largest trading partner for the US, has been proactive in its efforts to try and avoid the levies by cracking down on illegal immigration. The Mexican government has also focused on drug trafficking along its border with the US and has extradited major cartel figures wanted in the killing of a US agent. TRT World's Craig Boswell reports.
Shelters in Mexico's northern border cities have seen migrant numbers dwindle since January, a combination of Mexico's deployment of some 10,000 National Guard elements and the cancellation of asylum-seeking programs in the U.S.
Right
now we have a decrease in migrants, since we don't know what type of program the United States could open, so the decrease has been noticeable.
Many migrants seeking the American dream are forced to return to their home countries.
I'm frustrated and disappointed with the things that I could not achieve because my goal was to get there and buy whatever I want, like buy a house. But since we couldn't do it, we'll return to Venezuela.
Mexico's efforts to combat drug trafficking have intensified, and drug seizures are publicly displayed. Mexico has also recently handed over 29 cartel figures to the U.S., including drug lord Rafael Caro Quintero, who was wanted in the death of a U.S. agent.
About 15 days ago, they seized around 20 million doses of pills containing fentanyl. More than 8,000 people have been arrested and weapons were seized.
For Trump, the progress may not be enough.
But the drugs continue to pour into our country, killing hundreds of thousands of people.
And 25% tariffs are his response.
So that goes on the 4th of March.
The sweeping tariffs on imports from Mexico and Canada had been paused for a month back in February, but Trump appears to have cleared up any confusion over what happens when that delay expires, despite Mexico's efforts for a cartel crackdown.
Their requests have undoubtedly accelerated confrontation with criminal groups. That is what is very noticeable.
Whether it's noticeable or not to the U.S. president remains to be seen. Mexico, Canada, and China are definitely noticing the tariffs, and each has their own response. Craig Boswell, TRT World, Washington.
Now, markets are never just about numbers. They reflect confidence, uncertainty, and the ever-changing global trade. When big economies make policy shifts, investors react, stock indices fluctuate, and businesses adjust their strategies. As the new tariffs come into play and economic data shifts, all eyes will be on how the markets will respond next. So let's look at the market movers. Japan stocks, they are leading declines with a sharp 2% drop. And the Nikkei 225 tumbled 1.69%, marking one of the steepest declines that it's had in recent months. The broader Topics index also suffered, falling 0.96% as market sentiment weakened. Hong Kong's Hang Seng index slipped 0.46%. China's CSI 300 lost 0.25%. You're seeing the trend here. Australia's S&P ASX 200 down also 0.56%. It all reflects cautious investor sentiment. South Korea's Kospi, well done, remained flat, but the small cap Kosdaq dropped 0.75%, showing uneven market movement. Retail sales and employment data, they offered mixed signals. Japan's employment rate rose slightly to 2.5%, surpassing expectations of 2.4%. In contrast, South Korea's retail sales fell 0.6% for January after a revised 0.2% gain in December. Meanwhile, Australia reported a 0.3% rise in retail sales, aligning with market forecasts. Okay, let's get more on this now from Dylan Wu, who is a research strategist at Pepperstone. Appreciate you coming on. First of all, let's talk about the market reaction. How would you describe it? Is it fear? Is it uncertainty?
Well, although it's a quite challenging task for us to give a exact percentage of each factors, but I think just partially the market fluctuation is because of fear. With escalating tariff tensions, we're seeing sharp rise in cross-market volatility, and I mean U.S. stocks as risk assets are facing short selling, while gold typically as a safe haven asset has also dipped in the past week. So this could be due to investors unwinding some profitable positions to free up liquidity or meet margin costs. But looking at a broader time frame, I would say fundamentals also play a role here. One factor is the growing skepticism about the U.S. exceptionalism narrative. Weaker retail sales and the recent decline in consumer confidence have raised concerns about U.S. economic outlook, which could partly explain the short selling in the equities as well. And on top of that, if tariff genuinely, I would say, disrupt some tech supply chain and lead to downward earnings revision, then the selling pressure isn't just about sentiment, it's fundamental shift, I would say.
The markets, I mean, they're nearly all down across the board. Is this reflecting the sensitivity of human operators, or is this all built into the software and it just analyzes the system with cold hard logic?
I would say it's partially because of market sentiment, and after the tariff update, market would sometimes overreact. People will get panic, but after then, they will recover some of its fair sentiment and back to more of the fundamental side.
Which sectors do you think are going to be the most vulnerable to what we're seeing in the markets at the moment?
Well, I've noticed some sector rotation in the US agri stocks. Actually, energy and financials have been relatively resilient in tariff concerns, while tech stocks are looking more vulnerable from a personal perspective, especially with some ongoing tariff updates and the high likelihood that Trump could further tighten chip export restrictions. And a clear example here is obviously NVIDIA. After earnings, trader who had bet on a blowout report and pushed the stock higher quickly cut their long positions, and at the stock broke key strikes price. The unwinding of some hedged put positions from pre-earnings setup added more selling pressure, making the drop even worse. So I would take a closer look at the tech sector performance.
Dylan, thank you so much. Dylan Wu, research strategist at Pepperstone, my guest. Now, trade wars don't just impact countries, they hit businesses, workers, and even shop prices, as we all know too well. When new tariffs come into play, the markets react, the industries scramble, and then members of the public like us start feeling the effects directly. With tensions rising already between the US, Canada, Mexico, and China, the big questions are how far will this go, and what does it mean for the world economy? The US just slapped a 25% tariff on over $900 billion worth of imports from Canada and Mexico, and the response was swift. Canada fired back with 25% tariffs on $107 billion worth of US goods, setting the stage for a serious trade standoff. Experts say this could mean higher prices, job losses, and major disruptions across industries. Markets didn't take the news well. As we just heard, stocks tumbled. The Dow Jones dropped 1.48%. The Nasdaq plunged 497 points. That's about 2.6%. And the impact hit currencies too. Both the Mexican peso and the Canadian dollar lost value. The motor industry was among the biggest losers. General Motors dropped 4%. Ford slipped 1.7%. North America's car industry is built on a tight cross-border supply chain. The tariffs could really throw a wrench in the works. If disruptions continue, new car prices could jump by as much as thousands of dollars, putting pressure on both buyers and manufacturers. Some experts warn Michigan's car plants could even close, leading to layoffs and further economic trouble. It's not just North America feeling the heat either. Trump's also raising tariffs on all Chinese imports to 20%. It's escalating tensions even further. And in response, and there has been a response, China announced it will impose additional tariffs of up to 15% on imports of key US farm products. That includes chicken, pork, soy, and beef. Okay, let's talk about this now with Mario Arturo Ruiz Estrada, who's a professor of international economics at the University of Kuala Lumpur in Malaysia. Welcome to you. Okay, let's talk about the consumers first. Okay, we interrupt our broadcast and we're going to listen to a Chinese official now speaking.
In the U.S. itself. In a spirit of humanity and our friendship with the American people, we have taken strong steps to help the U.S. with its response to the fentanyl issue. This is obvious to all, and people from various sectors in the U.S. have expressed thanks to China on multiple occasions. Instead of showing appreciation, the U.S. has smeared and shifted blames onto China and pressured and blackmailed China with tariff hikes. They are punishing us for helping them. This cannot solve the U.S. own problem and will deal a heavy blow to the dialogue and cooperation on the counter-narcotics between the two sides. Let me reiterate that the Chinese people have never been swayed by fallacies, deterred by intimidation, or coyed by bullying. Pressuring, coercion, or threat is not the right way to engage with China. Exerting maximum pressure on China is a mistargeted and miscalculated approach. If the U.S. really wants to settle the fentanyl issue, it needs to stand by the principle of equality, mutual respect, and mutual benefit, and engage in consultation with China to address each other's concerns. If the U.S. has other agenda in mind and insists on waging a tariff war, trade war, or whatever war, China will not flinch and is ready to take due response. We urge the U.S. to stop being domineering and return to the right track of dialogue and cooperation at an early date. Next one, please. Anything else? Then let's call it a day. Thank you for coming.
Okay, let's go back to our guest, Mario Arturo Ruiz Estrada. Apologies for breaking away from you there, Mario. We just went to listen to, that was a live press conference there with Len Jian, the Chinese Minister of Commerce, who was reacting in real time to Donald Trump's tariffs and making it very clear that he considers them to be very aggressive, and explaining that China will not react positively to that very aggressive approach. And he said that pressure being exerted on China, they will not flinch. So this suggests that China is going to hit back. Well, it already has, but it's going to hit back certainly in proportional measures. And this doesn't bode well, does it?
I'm very impressed because now the real war is coming. The international trade war is coming. And this war is going to have more worse effects than the war we know. It's going to have economic depression, no economic recession. We're going to have economic depression. If we continue 1 year in this fighting of tariffs, we're going to have economic depression. We are not talking anymore about economic recession. I'm talking about economic depression, and we're going to have a global inflation. The problem is going to be more affected as developing and less developed countries with this trade war. Now, we need to accept something. China productivity is very high and more competitive than American products. And this one can see in the prices worldwide. And the United States cannot catch up. And what trying to do is stop this economic growth of China, international trade, using tariffs. And why Canada and Mexico involved in this conflict? I want to remind something. United States depend from human capital, cheap labor from Latin America. And they depend also on natural resources from Canada. I can understand this new policy of the Trump administration. What it's trying to do is because three main partners, they are fighting with this, and plus Europe. And now we can see that it's not going to bring any positive effect to the world economy. We're going to have a critical situation until unemployment is moving up, and we're going to have a global inflation. If we have global inflation, it's going to have very high impact, and the recovery is going to take so long. And the idea to impose tariff is become like a geopolitical instrument to manipulate countries. And this is, I disagree, because we cannot mix politics and international trade and the saying that the final consumer is going to be affected with high prices. And now we need to see how the prices is moving from next month worldwide.
Mario, you talked about the trade wars being a way of influencing states. Are they about influencing states? Or, for example, I assume that what Donald Trump wants is for Americans to start buying American-made products and stop buying imported things. So he makes imported products more expensive so that they'll buy domestic. But of course, people might just stop buying altogether if things become too expensive. But is that not his intention?
Okay, something that people need to know. Now, people are doing shopping online. Now the trade is worldwide. You cannot say that you need to go and shop in the United States to buy something. Now everything is online. The problem is they cannot see the situation that the world become a global market, and impose tariff like anyone is generating a very huge damage, not only for the United States or China. In the end, everybody is a loser in the game. And this is what we need to realize, that imposed tariff is generate a kind of negative effect on employment and level of prices. Now, what we can see, Mexico is a very important trade, commercial trade for the United States. Now, thinking carefully, half of the consumption of agricultural products come from Mexico. And now my question to you is, if suppose we send one avocado from Mexico without tariff, it's 25 cents, but with tariff, it's become 70 cents. Imagine the consumers is going to buying less for them. And at the same time, I can understand that the consumer is going to pay the high cost of the tariff, because these prices is going to be, in the long run, a huge damage, because if the consumption reduce for the inflation, logically, it's going to affect the economic growth of the United States. The American economy depends on free trade. I don't know what they are doing. They don't have clear that free trade is the basic mechanism to develop economic growth in the United States. And they impose tariff, they are closing and killing the economy quietly.
Mario, sorry to interrupt you, but I mean, you pointed out that trade can be reduced by this. I just wondered, though, is as much as what is happening an issue, is the perception of it also damaging the fear of what's going to happen? Because investors see the changes and they start to withdraw their funds, which then affects, you know, the balance sheets of individual companies. Is the fear just as dangerous as anything?
Look, investors, they want to see how the consumption is moving. If the consumption is dropping because the prices is higher, logically, I keep my money in the bank because I know people is not going to buy and we're going to have overstocks. You know, in 1929, the economic recession in the United States is overstock. It's not because they have inflation, they have overstock. And the economy become a very bad, chaotic situation until we have 5 years that the stock market was horrible in the United States because they don't have the money to pay so high price. And additionally, unemployment in the United States was horrible. People live in extreme poverty. Tariff generate poverty. This is my message to all the business and consumers. Generate poor development of investments, poor consumption, and generating high impact in the economic growth. And generating, we start to feel the touching of the economic recession. But in 1 year later, if we continue this fight, it's going to have economic depression or stagnation, unemployment, and inflation, high inflation. And then we cannot escape from this because it's like how to revive the economy again.
Mario, I do apologize. We're going to have to wrap it up there, but the message was pretty clear. Tariffs create poverty. Much appreciated for coming on. Mario Arturo Ruiz Estrada, Professor of International Economics at the University of Kuala Lumpur. Thank you so much, sir. Okay, let's take a quick look at some other top business stories generating headlines around the world. Taiwan semiconductor manufacturing will invest $100 billion to boost chip manufacturing in America. The president hailed the move a tremendous one by the world's most powerful company. It brings TSMC's total US commitment to $165 billion, funding 5 new fabrication facilities in Arizona. TSMC, a key supplier of semiconductors to companies like Nvidia and Apple for AI applications. Nvidia's stock dropped, though, 8.7% Monday to its lowest closing price since last September. That followed reports its AI chips are reaching China despite export controls. The Wall Street Journal reported Sunday Nvidia's latest Blackwell chips are being sold to China via third-party resellers, bypassing export restrictions through nearby regions. South Korean defence stocks surged Tuesday, reflecting a global rise in defence names amid heightened security concerns from the Russia-Ukraine conflict. Shares in Hanwha Aerospace jumped 16%. Hyundai Rotem climbed 11.5%. The growth comes as South Korean military manufacturers experience increased demand in 2024, fueled by substantial arms orders. Now, technology moves quickly and not every innovation stands the test of time. It was once a household name, now Skype, having revolutionised online communication in a world dominated by new platforms, is finding life a bit tougher. AI developments, even the biggest names, have to adapt. Microsoft's shifting focus, that's basically what's happening here. So what does it mean for users and the broader tech landscape? Microsoft is going to shut down Skype. I'm sorry, but it's happening. May 2025, it marks the end of an era. The tech giant originally acquired the platform for $8.5 billion back in 2011, its largest purchase at the time. Now, the decision comes as Microsoft shifts its focus to something called Teams. Yeah, I'm not aware of it, which has grown into a dominant, apparently, communications platform. At its peak in 2016, Skype had more than 300 million monthly active users. To Skype, someone was recognized as a verb in several dictionaries, including the Oxford Dictionary. But by 2023, the number of users had dropped drastically to just 36 million. Competition coming from Zoom, WhatsApp, FaceTime made it difficult for Skype to keep up, especially in the pandemic. Microsoft Teams has become the company's priority, serves hundreds of millions of users worldwide. Skype users, apparently it's very easy. They just migrate their messages, their contacts, and their chat history to Teams, don't even have to create a new account. The transition signals, though, a new era in workplace and personal communication, and it consolidates Microsoft's presence in the market. Let's discuss this now with Arthur Goldstuck. He's an information technology commentator. Welcome, Arthur. I must be a Luddite because I didn't know about Teams, and I'm firmly still entrenched in the Skype camp. I use it daily, love it, quite upset to find that actually not everybody else does. Where did it lose popularity?
Sad to say, this is probably the last time I chat with you via Skype, but this went back to 2020 during the pandemic when Zoom suddenly came out of nowhere. Everyone suddenly had to discover video conferencing, and that's what Skype really brought to the world back in 2003 when it launched, was a seemingly user-friendly video conference solution. But it was because we didn't know any better that we thought it was user-friendly. It was always very clunky. You had to find your way around it. And that's why it didn't really capture the imagination of the world, even though people like you and I used it quite actively. But then came the pandemic, and people suddenly needed to communicate urgently via video conference. And Zoom was waiting for them. And Zoom was incredibly user-friendly. You could click on one button to join a conversation, as opposed to Skype, where you had to download, sign up, sign in, and then find your way around. So Skype gave up the verb, so to speak. Zoom became the verb for video conferencing in 2020. And it still to this day is what the ordinary person talks about when they talk about a video conference chat. Teams, on the other hand, was integrated into Microsoft's Office products. It's far more clunky than Skype. It's difficult to use if you're not a corporate user. So for the ordinary consumer, Teams is still something that they'd rather avoid, and Zoom is still the go-to. But Teams has really captured the market from a business user point of view today, and Skype has become irrelevant. And the real problem is Microsoft never truly invested in Skype.
Arthur, I'm always confused by business decisions like this. When I just mentioned that Microsoft paid, what was it, $8.5 billion for Skype, and now they're going to shut it down. Is that money that's just lost, or are they going to make it back by somehow funneling people from what was a free video chat service into something paid?
I doubt whether Skype has enough of a user base to justify that kind of investment in migrating people across. The real issue is similar to when Facebook bought WhatsApp. They were really trying to buy a competitor or a potential competitor before it became a serious competitor. And I believe that's what Microsoft really were doing. They were trying to buy a competitor out of the market. And if they had really wanted it for its technology and for its users, they would have integrated it fully into Microsoft services. They never really did.
Yeah, it's interesting. I always suspected that, but effectively just confirmed my belief that sometimes companies they make spoiler purchases sometimes just to ruin it for other people. What do you think is going to be the next big face in terms of online communication? Is there going to be a name that we're maybe not so familiar with that's going to spring to the fore?
I'm at the Mobile World Congress in Barcelona at the moment, and the big buzz phrase here is agentic AI. In other words, AI agents that will do everything for you, and you'll communicate through these agents. So Chinese companies, interestingly, are leading the way there with Honor, and Huawei especially making big announcements around agentic AI, and Huawei talking about experience agents. And the experience agent will take over the experience of the customer with the telecommunications operator. So your mobile operator is going to identify your behavior or analyze your behavior through these experience agents who will then manage the relationship with you. And once people experience
Arthur,
the experience...
do apologise. I'm afraid the clock has beaten us. We'll have to wrap it up there. Great to speak to you, though. Arthur Goldstuck, information technology commentator. Tariffs are up, the markets are down, Skype is dead. I don't know what to say, but I need to have a quick lie down. That's your business news. Thanks for watching.